Morning, Fractal Effects team. Before we get started, please read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have a downside expansion model today. We're just looking at NAS. We're still about 26 minutes away from range formation. So again, downside expansion model. We have a sell model, market manipulated down, but then we had a double break right into the blue zone, purple zone, and then a drop. So now we're getting another move back up. There's previous day's low. We have a 4-hour fair value gap down here as well. So all these fair value gaps, so that's the opening NYC fair value gap. So that's a breakaway gap. You could tap any one of these and drop to hit previous day's low. I'd like to see it get up here and touch that 20. We had that crossover and a quick tap and a run. So this is actually more, this midway gap is more of a gap of interest. But I could just tap here and take a run for it. I'd rather have it up here. If we go to the 4-hour, there's your 4-hour fair value gap. It's ways down there. Let's make this a different color. It's kind of the bigger target for the day. I believe that's where we're heading. I like to see what it does when it gets here. Remember, hit a fair value gap, create a fair value gap. This is more of an area of interest for me, closer to that 20 EMA. Could come all the way back up here and tap the 20 as well. I mean, sorry, the purple. Purple and tap the 20 all the way up here. So once again, from the early model, which is a trade we took, it was downside expansion. We had a sell model. We literally broke the bottom of the manipulation range was down here. It's right there, sorry. You can kind of see it right under the blue. So we broke it, we had a double break, pull back into the EMAs, into the blue, and then a drop. There's a lot of points of confluence here. The fact that the NYC fair value gap is sitting flush right inside the purple zone. This is a very, very highly algorithmic zone. I'd rather sell from up here. We have another 20 minutes before the range formation, and we'll switch over to the spotlight strategy, but I'd like to see it come all the way back up here. If we can tap this area and then ride that down into the previous day low. This would be a great sell. I'm not interested in a buy today at all. That's the perfect 1 to 3. And then it could go obviously into the 4 hour here, but aim for the low hanging fruit always. We're right across the board, 1, the 5, and the 15. Now it's just about how deep it wants to retrace before it extends and hits the previous day gap. And again, it could just continue running. It could take this fair value gap. It could take this one. But this is the magic zone. And as the 20 moves, we'll follow along with it. But I'd like to see it at least come back to the 20 and then push away. But we'll see. Could just tap it right here, come back up. Doesn't change anything. Then we would just wait for a confirmation, another pullback to the 20, and then an extension. 1 standard deviation would take us right into the purple zone anyways. So a bearish confirmation is the only last thing left that would add to this confluence, but we have a downside expansion model, sell model, red box right across the board here on the 1, the 5, the 15. Do not ever buy back into a zone when you know what direction it's going. We want it to come back into our zone and then look for a sell setup. The beautiful thing about these two strategies, the spotlight strategy and the blue zone strategy, is we already know what our bias is going into it. I'm not looking for a buy. You know how we always talk about engineering new liquidity. The market starts engineering new liquidity to fool people. So when you see a zone where it's engineering new liquidity and there are people that are going long from a fair value gap and people going short from a fair value gap, when they really sandwich it in between these two zones, your bias is already made up. You already know that you're going to go short or you're going to go long based off of our strategy. So we're not even fooled by that other fair value gap. We just look for a proper setup to go in the direction of our bias. And if we lose, we lose. That's fine. But we don't fall victim to their trap. Losing is not part of the trap. Losing just shows that they increase their manipulation. No real news drivers today. And on days like this, we do get a retracement sometimes back to what's called fair value. Fair value is usually NDOG or the NWOG, new week opening gap. Change this to orange. Now it's just a bit of a waiting game. So now the 20 EMA is slowly coming into this fair value gap. Anytime you have 2-3 fair value gaps back to back, another good idea of where they could be going is the midpoint of all three of them. So you can take a box tool or the Fibonacci and find out what the 50% is. And again, that falls right in here. So I'd rather just wait for it to come into this fair value gap and then look for our setup. If it pushes past this, then great, because this is an even highly algorithmic area with more confluence. It also might want to just sweep this previous day low and then use that sweep to push up. Remember, the market is only doing one of two things: sweeping liquidity or filling in inefficiency. So if it sweeps this liquidity, it could either go then tap this inefficiency, or it could just pull back and tap this inefficiency and then continue down. If it keeps pushing and pushing, then we'll just wait for that confirmation and see what kind of a setup we get. And for any of you that were following along in the early model, congratulations, that was a clean setup. Literally taking a sell there right into the purple zone. So this is a 5M time frame, obviously on the 1M. You can see. Wait for it to load. So again, pushed in, created a fair value gap entry. You could have used this one right here at the blue zone or waited till it passed the purple zone. And then it just dropped. And again, for any of those, any of our students that caught that, they're already done for the day. You should be able to see these trade setups on your own. This should look obvious. Look how quick this was. Look how quick it was to reassess this, assess this market. Downside expansion model, as far as Spotlight is concerned. Sell model, as far as the blue zone strategy is concerned. There you go. Sell, sell. You want those to be lined up right across the board. So then what do you wait for? The manipulation move. Here we manipulated down first, but the same candle, there wasn't any time for the market to even trap us because the strategy is so tight. You can see that the same candle that broke the manipulation zone, this candle right here, opening candle, 9:30, same candle that broke that zone, also then pulled back, took out this previous candle high, and then broke again. So this candle on its own was a double break. That means it broke the bottom and it broke the top on the 5M. It already sealed its deal. We already knew that now this is in complete alignment with the rest of our strategy. Downside expansion model, sell model, and a double break to the downside. Then we just wait for a retracement back to a key zone. Look for rejection. Look how clean it rejected off that blue zone. Apologies as far as the charts are moving slow because we're live right here. Look how clean that rejection is. Do you think that's a coincidence? for anybody who wants to talk about buying and selling pressure, does that look like something that's 100%, and we see this every single day. Every single day we see this on the charts. Does that look like it's buying and selling pressure? Do you think people are buying and selling right at that price? No, it's not a coincidence. And these zones are being painted out in real time. If you could see the math behind what these zones are, it would blow your mind. Sat down with 3 different quantitative analysts to actually create this. These are highly algorithmic zones that the market is drawn to and pushes from. Not a coincidence that it pushed from this purple zone. Somebody could have taken that sell. We had a retracement. We already knew that it was going to be a sell model. We broke the lows here. This happened pretty early in the morning, but pulled back to the purple zone, which also happens to be sitting right near 50 to 61% of the overall fib range from Asia low to London high, right into the purple zone, and a sell. One more pullback, drop. Pull back to the blue zone, drop. And this blue zone was painted out. This was already painted out by 5 a.m. That means at 5 a.m. we already knew what area the market was going to bounce off of. Bounced off of it here and went up. Finally got under it and sold off. So the market has already ran down. It didn't really tap any of these fair value gaps. This is what we call a runaway market. During a runaway market, what do? We wait for confirmation, retracement, extension. Now the only thing here, though, that you want to be leery about is the fact that majority of the juice has already been squeezed as far as what we were looking for. We were looking for previous day's low and this 4-hour fair value gap. Now on a higher time frame, let's go back to the 4-hour. We have another 4-hour fair value gap down here. Just want to mark that out. You want to mark out your daily and your 4-hour fair value gaps. Know where they are. Make sure they match up with your 1 standard deviation. But now we have about 3 hours, 36 minutes in this. I was going to say there's another fair value gap forming up here. Drop back down to the 5. About 7 minutes for range formation. We'll just wait for that. There's a reason why this strategy works as well as it does. It is one of the most back-tested strategies out there. There are people out there trying to sell you indicators, just random indicators. And these are time-lagging indicators. They're showing you past data. An EMA, for example, we use this in our strategy, but this is showing you past data. The 20 EMA, it's showing you what the overall average of the last 20 candles was. So there's certain indicators we use to help us form our bias, and we utilize it in our confluence. But the blue zone and the spotlight strategy is real time. It's being calculated in real time, and it's projecting zones in real time, letting you know what the next move is most likely to be, what the next high probability setup is most likely to be. Nothing's 100%. But again, it's utilizing certain mathematics It's utilizing past historical data that's projecting it um, into these zones and letting you know exactly where the market's going to be gravitating to. This is the only strategy I recommend for anybody, new or old. If you've been doing this for a very long time, for people who like to trade, for example, naked charts, this does everything for you. This shows you where all the zones are. So you don't have to wake up every morning and start marking it up on your own. As mentioned before, look how clean this is. This is not buying and selling pressure. The fact that this blue zone was marked out by 5 a.m. Eastern Standard, and you're trying to tell me that there was buying and selling pressure here. For anybody who even wants to talk about support and resistance lines, if I turn this off right now, let's turn off both these indicators for a second. Where's the support and resistance? Isn't this support and resistance? So there. And here. That's support and resistance. So what does that have to do with this blue zone and how clean the bodies close? What does that have to do with support and resistance? What about here when it bounced off the midpoint of the blue zone? What does that have to do with support and resistance? Support and resistance is down here and up here, right? That's support and resistance. What does that have to do with where the market bounced off of? Because if buy and sell orders and buying and selling pressure happens around support and resistance, why did we get a clean entry here? Why did the market close, candle body close right in our blue zone and again, and then dropped, came back, tapped it one more time, and dropped? And that's where we took our sell. Took our sell there, right into the purple zone. You got to know what you're looking for. I don't blame anybody. There's so many convoluted strategies out there that are talking about geometrical patterns, harmonics, support and resistance. They teach buying and selling, pressure, psychology. None of that is happening here. How is it that by 5 a.m. we had already painted out the zone that was going to tell us exactly what was going to happen? All we had to do was align it with our strategy. Downside expansion, sell model, great. Now I'm only looking for a sell off the blue zone. And that's where it came, right at open. If it's all based on selling and buying pressure, how is it that every morning we're able to paint out the manipulation zone? It's right there. There's the green line up there, and there it is right here, right before open. So what's the market do? Manipulated down, came back up into the blue zone. Remember, we already know we're looking for a sell. What happens when the market manipulates in the direction of your bias? You wait for a second break in the direction of your bias, but you expect a pullback. Expect to pull back into your zones. It could have gone as deep as the purple zone. That's fine. But as soon as we had that second break, which happened in the same candle, because this candle wick took out the high of the previous candle. So lucky for us, this candle revealed the dealer's hand right away. This is the opening 5M candle, 9:30. And right away, they already showed their hand. They broke the bottom and they pulled back. That means this candle was a double break on its own. Double break in the direction of your bias seals the deal. Then you just look for a pullback into the blue zone, and then you look for your trade setup. That's how simple today was. Majority of people that were trading the blue zone strategy were done in 10 minutes. 10 minutes, they got a 1 to 3. Here, I'll show you exactly where they got in. Right now, we're still waiting, by the way. Our range is formed. We're still waiting for a confirmation. We'll turn the spotlight strategy back on here. So that's the low. That's the dealing range low as soon as we get a confirmation. Now it looks like it's pulling back. We'll take a look on the 5M in 2 seconds here. But on the 1M, so after we already had our double break, pulled back. There's a fair value gap in here that was created, not tapped. But then we pulled back to the blue zone and then continue to drop from there. Could have taken that into the purple zone, into the low. Right into these lows. 1 to 4. Done for the day. Now let's go back up to the 5M. So now that the juice has been already squeezed, meaning we've taken out previous day's low and we've tapped this 4-hour fair value gap, we could get a deeper retracement. This is where they're going to start engineering new liquidity. There are people going long off this 4-hour fair value gap and the fact that we swept previous day's lows. And I've said this before, it's only a sell model until it's not. It's only a buy model until it's not. Meaning once it's delivered, once it's reached and achieved its goal, then it can switch on you. So if we've taken out previous day's low and we just hit this 4-hour fair value gap, yeah, that sell model could technically be complete now. That's why we wait for confirmation. As soon as we get a confirmation, now we're back in the game because now we're back to 80% probability that it could continue down further. And then we would look at this lower 4-hour fair value gap and our 1 standard deviation, this area here. But that's why we wait. Because all we know, the market could actually just push up and give us, let's get rid of that, could push up and give us a bullish confirmation and then head up for previous day's high because it's already delivered. Just because we're red across the board, just because we have a red box and a downside expansion model, doesn't mean that it's all over. Now keep in mind, if we get a bullish confirmation, I'm not interested because everything was bearish. I do not like to counter trend trade. It is going to take a long time for the 1, the 5, and the 15 to turn green. And I doubt it's going to do it in the next hour. Especially on a day where there is no news. Now, as mentioned before, though, on days where there is no news, the market likes to pull back to fair value. What is fair value? Fair value is the end dog, the new day opening gap, or the end WOG, which is the new week opening gap. So the market could technically pull all the way back up here. So if we get a bullish confirmation, I'm not interested. I'm only waiting for a bearish confirmation. But I definitely want to see a deep retracement now that it's delivered, and it could turn on us. I want to see that confirmation first, then a deep retracement and a push. But let's see what we get. If you're not in a trade setup 1 hour after the range formation, call it. That's the day. Live to trade another day. There are also people that do get greedy. There are people that actually did profit from an opening move, and then they wait for another move. Don't do that. The whole purpose, especially for beginners, is to get one successful trade set up a week. So if you get one a day, call it. Don't be greedy. One a week at the risk reward of 1 to 3 ensures that you're making 12% a month. That's 3% a week. If you're lucky enough to do that in a day, like that was 1 to 4 today, you should be done if you got that. You should not then wait for the spotlight setup and see if you can squeeze more juice out. If anything else, look, I just told you this is now getting convoluted. Some of the biggest areas to the bottom, to the downside, have been taken. Can it keep pushing down further? It can. But these were safety nets. These were the low-hanging fruits. The previous day low, this 4-hour fair value gap. With this big drop, anytime you see a big drop into a higher time frame PD array, you will see, and you could get a deep pullback, or even a complete change in direction. If we get a confirmation on any other asset, we will be jumping over. Let's take a look at, while we're waiting for that, we can take a look at the US 30 for now. So with US 30, we had a downside expansion model that turned into a bit of an upside with New York closing above Asia highs. We also had a mixed bag here too, where we had a mixed model. Remember, a mixed model is where you break both sides of that blue zone before 5:30, or sorry, I have to say 8:30 Eastern Standard. So we broke the lows. Everything about this was more or less trending down, but then we wait for that manipulation move. And with US 30, let's see where we manipulated first. Sometimes it's hard to see. So there's the top of the manipulation zone. Just want to see if it, and there's the bottom of the manipulation zone right there. That green line right inside the blue zone. So we manipulated up first. And this is still one single leg. So we manipulated up, pulled back, and now depending on that confirmation, if we get a bullish confirmation, that means we'll get that double break, and that means that this market wants to push up. But technically, it could continue to just keep dropping from here. But now that the range is formed, we have to wait for confirmation. If the range wasn't formed, a sell would be more interesting. But again, your bias has to change. You have to change with the markets. So as soon as the spotlight strategy is complete at 10:30, we always switch over But as you can see, it was one clean leg that broke. We have had no double break. The only way you get a double break is if this high, we had a pullback, but then the high was not taken. At least not yet. There's your New York fair value gap. Usually these indices are lined up, but as you can see, completely decoupled. We're green across the board, green box, red across the board, red box. No other confirmation yet from any other asset, so we'll just patiently wait, see what we get. NAS now sitting inside this fair value gap. Still no confirmation. After all that analysis that we just went over, there's no way I would ever take a sell from up here without a confirmation, because it's already tapped these higher time frame PD arrays. It could actually just switch up and head back up. So my bias is still bearish, but I need a bearish confirmation. If I get a bullish confirmation before our time is done, I will just pass on this market. US 30 making one more swipe up. If we get a bullish confirmation and we take this top, then we have a double break to the upside as well. Then I'd like to see these lows taken and maybe it tap NYC fair value gap before heading up. But we'll see. One step at a time. About 18 minutes away from 11 o'clock. We can take a look at oil real quick too. Actually, let's take a look at gold. I don't recommend beginners. I don't recommend trading gold when you're a beginner. It moves really fast. You can see even this, even with our indicators, you can see how chaotic this looks. Oh, sorry. That's the futures market. Let's go to CFD here just so we can see. So with gold, we had something similar. We had a sell model. So with the sell model, it came back up, did a pretty deep retracement. There's the top of the manipulation zone. So there's the bottom of the manipulation zone. We manipulated down first. So let's see if we had a double break. No, this is actually one leg. So this whole thing is one leg. That means it's still prime. The only thing here, though, is you have a cell model, and I suspect, let me just take a look at the spotlight indicator as well. Bit of a mixed bag here. So we had an upside expansion model originally, and then New York swept out all the lows. So remember, at any time you're confused, just start dropping in those arrows. What do we have? We have a bit of a, we had an upside expansion model. We have an upside expansion model. We have a cell model. But we manipulated down first without a double break, meaning the market wants to go up. Now the only thing left to do is take a look at the day candle. We close above previous days. So we took out those lows, closed above. We took out the highs but closed below. So this is technically bearish. And we have yet to take out previous day's highs. So if we go back up to that arrow model, let me say it was bearish. So now that we look at this, that's 50-50, right? We have two arrows pointing up, two arrows pointing down as far as the bias, directional bias. And it's all back and forth, consolidating here too. So what does that mean? You either pass on this market or you wait for that confirmation. Because the confirmation is going to be the final thing that'll seal the deal on this one. We didn't have that with NAS. We were right across the board. Right across the board. Our arrows were all down. 100% confluence to let us know that this thing was going to drop. Here, you have two arrows pointing up, two arrows pointing down. That's 50-50. So what's the next thing that's going to actually break that tie? Confirmation. I suspect, though, a deep retracement back into the N. Is that the N dog or the N wog? So the N wog right here, I suspect a deep retracement into that. Maybe even to the blue zone, and then potentially a drop. We have a red box right now. Just got to wait for confirmation. But this is how you use these 4 points of confluence. Upside downside expansion model, what is it? Is it a buy model or sell model? Which one? What did previous day candle do? Where did it close? Did it close above or below the candle before it? And then which way did the market manipulate? Those 4 are your main key points of confluence to tell you your directional bias for the day. And then again, when you're tied like this, or you have a runaway market like this, then you wait for confirmation. Then you check, are you red or are you green across the board here on the 1, the 5, and the 15? So we came back up, tapped that purple. Now we're coming back into this fair value gap. Nas having a tough time getting past this fair value gap. Still no confirmation. About 9 minutes away from 11. Let's see if we get a move. Just gotta be patient. Keep in mind it was patience that helped us get that move. This was a pretty big drop in gold. I would have liked to seen it manipulate down, then pull back to the EMAs and our blue zone and drop. But just like we were mentioning over there, look at this. There is no support and resistance here. Up there and down there. So then why did the market bounce off of here, off the blue zone, and then here? Closed, closed, wick, wick, drop off the blue zone. Why did it come all the way up here and tap this purple zone and then drop? Not a coincidence. As mentioned before, 3 quantitative analysts working around the clock. That's what we sat down to create this strategy with. Make sure you check us out on fractaleffects.com. We've actually adjusted our prices now. Our packages are way more, they include a lot more features now, and they're cheaper. We've added a market watch. That's industry professionals. Remember, we're not allowed to give financial advice, but these are industry professionals that are giving you their insights, their projections, direct quotes. We can even check that out in a minute. I'm surprised no other confirmation across any of our assets, not even Forex yet. Let's check out the market watch real quick. So on days where Can't seem to find a trade setup? Jump onto the market watch. We've actually we've broken it down by industries. Whichever industries you're interested in, whatever you're trading, you'll be able to find some news in that sector. And there's the main news. Cover everything. Take a look. There's so many here that I haven't even had a chance to take a look, but every single day we're uploading new articles. There's new interviews. On top of all that, you'll see these little asterisks to let you know which categories and sectors have been updated. But take a look here. And then for people who are not members, check out our blog. That's free for everybody. Same thing here, updated at least 2-3 times a week. Take a look. You're going to find some industry news in here. And then you use this in correlation with our top-down market analysis to find yourself a investment setup. Swing trading strategy. It's all covered in the Learning Hub. So even though we took one trade today, over this course of this last week, we actually took we got into 3 investments, 3 different stocks that came into our buy zone because we did our top-down market analysis and we knew exactly what to look for, exactly what zones these markets were going to retrace into. And we took those buys. And those are all sitting in profit. Those are all sitting in profit right now. We've also partnered with a third party to bring signal service. People have been asking about that. We didn't want to do that ourselves. Again, that it's not exactly under our purview. But we have partnered with a company called Market Sentinel. And we will be incorporating that with the package. So when you sign up, you get free access to Market Sentinel, which is a Telegram signal service. And they are exclusively using and utilizing our strategies. So they actually reached out to us. They come with their own disclaimers, of course, and it's just for people who want to utilize that service, they can. But they pretty much take our strategies, mark up the charts, and then they're the ones who are actually dropping in signals for this market's about to push, this market's about to push, this stock's about to push, etc. And again, please make sure you read all their disclaimer and understand exactly how they operate. But that'll be something that we're going to incorporate for free. But that's a third-party application and platform. So we're constantly bringing you more and more value on the back end. When it's all said and done, our goal is to be your one-stop shop for everything investing. Swing trading, investing, your news, your daily scalps. You should be proficient in everything. But you got to be able to do this on your own. We're just here to teach you. Still a whole bunch of nothing. We don't really have any big news. I'm just going to take a, yeah, there's not too many big news drivers this week. Tomorrow, unemployment claims at 8:30. Friday, core PCE price index at 8:30 Eastern Standard. But other than that, nothing really big, which can make for slower price action, but at the same time doesn't mean you can't find those trade setups. We did today. Still no confirmation on gold, but again, bouncing clean off that purple zone. If it was going to go up, it would have done it from this fair value gap. Let's see if we wick here, or if we close under. If we violate it, then we'll just move and get rid of this fair value gap. Already we can see the push to the downside. So with gold, if we get a bearish confirmation, we already have had a early retracement back to the 20 EMA. So it could use whatever fair value gap is presented to start pushing. Let me just take a look at. So a bit of a mixed bag right across the board. Let me just see 4 hour. We got about 3 minutes 45 seconds for that candle to close. Let me just see where the 4 hour fair value gap is. So we might just be heading down to previous. We've already taken out previous day's lows. That's the next. Oh, no, that is previous day's lows. Sorry. I thought that was the day candle for a second. So could be heading down there. As soon as we get this bearish confirmation, let's see if it lines up with 1 standard deviation, because that's our low-hanging fruit. 2 minutes, 56 seconds left. We've already swept these highs right here. Tapped a purple zone, hit the 20 EMA. Now I want to see it tap a 5M fair value gap. Not fully formed yet, so I'm just going to drop this in, but we'll see. Start marking it up. We didn't quite hit that NWOG either. So we got to be careful. Make sure it doesn't do one more swipe up. Let's see where 1 standard deviation falls. I don't think we're going to be able to squeeze out a 1 to 3 here. And just because we know where it's going doesn't mean we're going to take it. If it doesn't give us our risk to reward, there's no point. 1 to 2.5, I might be interested. But I got to see how far. Let's see where this fair value gap drops. Let's see how far or how deep we retrace. If we can bring this stop loss down. Ideally, I'd like to see it somewhere here. 1 minute, 17 seconds. Let's see if this confirmation sticks. And then the next candle gives us a fair value gap. We got about 27 minutes left in our stream. And going forward, we will be bringing you even, again, more and more extensions, services, benefits that we can. We want to add more things to our charts. You'll be able to get your COT data with us. That'll be updated weekly. We're even incorporating, going forward, a journal. So you can actually journal your trades right through your Fractal Effects counts. AI integration for any questions you might have. If you need a breakdown on some of those definitions or a more in-depth kind of explanation on certain strategies and or market dynamics, our AI will be able to do that for you. Again, these are all integrations coming in the next few months. So we got our confirmation. Oil also confirmed. I'm going to switch this one over to gold, and actually I'll switch this one over to oil. No point in watching a dead market right now. Ooh, this looks nice. We got a upside expansion model. We got a buy model. We're green across the board. We just got a bullish confirmation. We manipulated up first, and we had a double break. This thing is good to go. But that's how quick you got to be able to analyze that. Now it's just a question of how deep does it want to retrace. We already had an early retracement as well, back to the 20 EMAs. So this is my area of interest. And we're aiming for 1 standard deviation. Let's see if there's enough juice there to squeeze. We got to make sure that so we got 3 minutes 42 seconds left. This fair value gap has to stay open first. This looks like a nice setup. It could come back down and take one last swipe, take out these lows and tap the opening fair value gap. So we got to be cautious of that. There's not too much room here. Otherwise, I would have liked to set my stop loss down here. So this is the only way it works is here. Let's see, 2 minutes 54 seconds left. Gold, 2 minutes 48 seconds to see if this fair value gap sticks. So both these look interesting. Oil more so. Oil, I'm confident that it'll go to 1 standard deviation. I just want to see if it's going to run up there first or if it's going to tap here or tap here. But this couldn't be more green. My apologies for the charts here. Again, they start moving slow as soon as we go live. At 22 minutes left, more than enough time. Gold's fair value gap getting tinier and tinier. Which isn't bad, makes for a tight entry though. Remember, hit a fair value gap, create a fair value gap. So first it's got to hit it, first it's got to create it, then it's got to tap it, and then we got to drop down. So 1 minute 20 seconds left. Let's see if it even leaves that fair value gap open. Same thing with oil. We got to see if this fair value gap remains open and exactly where we tap it. Proceed with caution just because I don't like how they left this completely. It just tapped a little bit of the opening gap. You like to see the midpoints tap. So sometimes they want to come back, swipe this, tap the middle, then go up. "43 seconds left. I don't know if this is moving closer. Sometimes you can't even zoom in that much. 15 seconds. Okay, so our fair value gaps are left open. Let's see what happens here with gold. Here's the 20 EMA. Here's a fair value gap. Let's drop into the 1M. Same thing with oil. This is US oil on the left. We got CFD contract for gold spot, which is the XAU against the USD. It's not the gold's, sorry, it's not the gold futures contract, it's the CFD contract, so just be cautious. And know your lot sizes when it comes to gold. Gold can rip your face off, even at 0.10 lot, micro lot. Remember, hit a fair value gap, create a fair value gap. We have a purple zone right here on the 1M. So it could go up and wick that. Did it even tap it? Hold on. No, hasn't tapped it yet. I want to see a full tap. On the 1M, we have fair value gaps here and here. So it could actually wick all the way up here and then close under this purple. But we want to see a bearish fair value gap created after it touches this zone and even wicks up here maybe. For oil, I want to see it come into this zone, bounce off that 20, hit the midpoint, then give me a bullish fair value gap. Hold on, where is the, here. Let's move this a little closer just so I can see if the risk to reward even makes sense. So there's our tap of the fair value gap. I want to see a bearish 1M fair value gap created. Otherwise, again, it could keep tapping and go up here. Depending on where that entry is, I'm just marking this up just to see. Do we even have a 1, 2? Yeah, I think we do. I put the stop loss above this. I'm actually more interested in hitting this purple first, but we'll see. About 17 minutes left in our stream. We should see one of these push. So for anybody who's wondering if they can be profitable doing this, just based off of the trades that we had last week, we went 3 for 1. There were 3 successful trades, 1 loss, which made that weekly average 8%. Risking 1% to make 3% for each one of those trades. So 8% was the growth on that account. That was with 1 loss. As long as you stick to the strategy, a loss is okay. As long as you're managing your position and managing your balance appropriately, it's okay to take a loss. But that's why everything has to be perfect. It has to be 1 to 3. It has to tap your zone. That's the only way you feel confident. That's the only way you can walk away and not feel any regret or remorse. How could you if you stuck to your strategy and you know that strategy is profitable? Then you can't feel guilty. But you're going to have to get used to the losses. Losses can't hurt you. It's part of the process. If you think you're going to run an entire week without getting a single loss, that might be a good week for you. But if you're going to do 2-3 weeks without getting a single loss, that's not That's not highly plausible. So learn how to manage your stress, your cortisol levels. Make sure you're meditating. Understand that this is a process. So now that we've hit this fair value gap, now I want to see a bullish fair value gap created, and it has to fall within the parameters of the risk to reward. It's exactly what we wanted to see, a deeper retracement. Let's see what it bounces off of. If it keeps just punching through, by the way, hold on, where exactly is? Because I know we have a smaller range here. So if it punches past the new day opening gap all the way to the new week opening gap and takes out this high, it's a deep retracement. So if it gets over the orange, we might not get that push, but this is a good area to turn around in. So if we get that bearish fair value gap, that's what we're waiting for now. This is driving even lower, better. This is good. The lower we get that entry, the better. We don't want to see it disrespect this fair value gap though. If it disrespects this fair value gap, then we're going all the way down to the New York fair value gap. Then we're going to most likely take out these lows, tap the 238, the orange line, and then use the New York fair value gap to push up. I'm still bullish. Nothing about this has changed my mind. Just want to see where we're going to turn around now. Still no bearish fair value gap here, but we are bouncing off the purple. And remember, the darker the color of these zones, the stronger they are. That blue, that's the darkest blue you can go. So that zone is stronger than this blue. This maroon color is the darkest you can go. So that's stronger than this purple zone. That's supposed to be purple, but just the colors that we have at our disposal, it looks almost maroon, but that's the strongest one. So if we went back up and swiped that, we're still within our parameters here. And dog, purple zone. Still just waiting. We're now using this fair value gap up here though. And if you check on the 5M, there was no fair value gap there. But we are getting a wick right off the bigger purple zone on the 5M. Okay, so this is looking interesting. Just move this out of the way. Let's see if this fair value gap sticks. And that could be an entry. And waiting for a bullish fair value gap to be created here on the 1M. Got 11 minutes left in our stream. Let's see if we can't find this setup. A little over 30 seconds left. My stop loss is still up here. 20 seconds. Five, four, three, two, one. There's your fair value gap. I want to see a tap and a candle body close over this. That still gives you your 3.47. Remember, if you have any confusion as to what we're looking at, it's right up here. Here's the ticker. This is the gold. This is the oil. Okay, so we've tapped this fair value gap. Let's see how high it wants to go. We want it to respect this fair value gap and candle body close below this line. Looking good. Look at this, we've already disrespected this fair value gap. That's why we wait. Going back up to take a swipe at this purple zone. So we've closed with inside this fair value gap. Let's see if we get that bullish fair value gap or not. Here we're pushing down again until I get a push past this. Now let's make this red. Or white's easier to see. So as soon as I get a body close under this, this sell is on. And it's 1 to 3.47. 4 seconds. 2, 1. There you go. That's the interesting sell. Still nothing on oil. Looks like it wants to set up, but we'll see. And for those traders that are just bad at like staring at the charts once you've entered a trade, set a reminder. Set an alert where 2R is. Because remember, we're supposed to move our stop losses after we hit 2R. So 2R. It's right here. Roughly. Sorry, this thing is just moving so slow. Anyways, I'm just going to drop it right there. That's 2R roughly. Set an alert right here. Hit that alert on TradingView. Add an alert. So you'll get it on your phone. And then set an alert here where your stop loss is. So you'll know if you either hit your 2R or you've stopped out. If you stopped out, that's fine. You didn't lose anything. If you hit your 2R, then you jump back on your phone and you switch your, move your stop losses to break even, and you take some off the table. Oil broke past that fair value gap. That's why we wait. Now let's go back up to the 5M. that to 1. So now that we've violated that fair value gap, we're most likely going to take out these lows and then see if we get a setup here. But we're already 5 minutes away from our stop time. Remember, if you're not in a high probability trade setup 1 hour after the range formation, you're done. Here in gold, we did find one. We did not take this on oil. But it's most likely heading for this fair value gap now, midpoint, and then the whole process starts all over again. Hit a fair value gap, create a fair value gap. So gold's leaving all these fair value gaps here. 2 fair value gaps back to back that it wants to tap. This is what I mean. If you're the kind of person who just sits there staring, this can be agonizing. Because you were probably in profit, and then suddenly you see your profits depleting. Once you've already entered a trade and you know where your stop loss is and your take profit is, it's better to just set the alerts and stop watching it. I've had trades come all the way up to my stop loss, just 1 pip away, and then drop. But this fit all the rules. So even if this turns against you, again, you do not have to feel any remorse, any regret. You should be able to do this on your own. If you're following along with us today, you should be doing it in a demo account. This should be practice for you. This is something you should be able to see on your own and do on your own. Make sure you understand all the concepts. Watch every single video in the Learning Hub, fractaleffects.com. Get yourself a demo account. Practice, practice, practice. Practice for 30 days. Make sure you're journaling every single day. Make sure you're calculating your risk to reward and what your overall P&L is for that 30 days. And when you feel confident enough, proceed. So gold coming back up, taking one last swipe here, taking this fair value gap, this fair value gap. One minute left in our stream. We will most likely call it there. There's your setups. That's your 2R. With your 3R being previous day's lows on gold. Oil never really gave us a setup, and most likely when it does, it'll be past our entry point, entry time. But we'll conclude there. We'll follow up with this trade tomorrow. We'll be live again tomorrow. So check us out on fractaleffects.com where we teach high probability trading. Please hit the subscribe button, turn on your notifications so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays. So we'll see you guys again tomorrow.